You have to come up with a thesis for your trading, a guiding principle, if you will. But where do you have to kind of draw the line in terms of recognizing when your thesis is wrong and when uh, when the evidence is kind of piling up against you, and what kind of
Mm,
psychological things do you need to be aware of in your own self sometimes, know
yeah.
thyself type thing, in order to be successful as an investor?
So there's a reason why my website's called Market Misbehavior, because I found that most investors, myself included, looking back at my investing history, it's like a comedy of errors in terms
Yeah.
of mistakes
Hmm.
we've made. And arguably those mistakes are your biggest learning experiences. So a big part of what I try to encourage people to do is track your decision making, track what evidence you're using to make those decisions, and then make sure you spend time looking back. And a big part of where I think technical analysis is valuable is because for two reasons. Number one, it takes the emotions out of your decision making, and a lot of our bad decisions are driven by emotions as opposed to the weight of the evidence. You mentioned flying earlier, Justin, and I'm a student pilot, but my
Oh,
my
okay.
my firm, my LLC, is actually called Sierra Alpha Research, and Sierra Alpha is basically a flight term for situational awareness, meaning
Uh-huh.
it's pounded into your head to have a sense of where you're at relative to your surroundings. And one of the things I learned very quickly as a student pilot is pilots are experts at getting the emotion completely out of the way. And
Hmm.
I know the first time I was asked to do a stall is basically, they put you in the conditions and they ask, all right, what are you going to do? And I'll tell you what you do. You absolutely panic and
Yeah,
your hands are
right.
sweating and the whole
I'm very
plane,
high up and the
it
ground
feels
is
like
very
it doesn't
far
want to
away.
fly anymore and you stop going up and it's not comfortable. And so
Yeah.
you have a very emotional reaction, but over time you learn this is the situation, this is what I'm in. So here are the steps I take to correct it. And as investors, that's kind of what you need to do. And the reason why you need those checklists, the reason why you need those systems is to minimize emotions and avoid what we call behavioral biases or cognitive biases. And you hinted at some of those, Justin. The two that I would mention, one would be the endowment bias, and the other one would be confirmation bias. And these are the two most common ones that I see with
Hmm.
investors, and not just newer investors, but seasoned investors, successful money managers for decades, I think still fall victim to these. Endowment bias is one of those where you hold losing positions way too long. And
Right.
if I asked you guys or asked any of our viewers or our listeners today, name a time when a stock or an ETF that you held started going against you and you just held it just because. Like
Hmm.
that is what endowment bias is basically you have an emotional attachment to that thing, that position, that thesis. And even though the evidence tells you very clearly not to own it anymore, you still own it. And I think Alphabet over the last 2 years, Goog is a perfect example of endowment bias, right? Look at the left part of that chart where the trend is up. Look at
Yep.
the right side, right? Look at 2021 versus 2022. So much change, right? We went from an uptrend to a downtrend. We went from being above the moving averages to below the moving averages. We went from outperforming to underperforming. We went from, breaking through resistance to failing holds to hold support. So if you hold Alphabet during that period over the last 12 months, you were missing clear evidence that something has changed, regardless of what technique you use. And so I think for endowment bias, for me, it's having a good routine of monitoring your positions, tracking when it hits certain triggers, right? So whether it breaks the 50-day or the 10-week moving average,
Hmm.
does it fail to hold support? Does it go from, making higher highs to lower highs? And having that rigor through your process, I think is vital. The other one I would say is confirmation bias, which is you start with your conclusion and then you gather evidence, which
Hmm.
happens so often and it's so sneaky you probably don't realize that you're doing it. But one of the common things is, are you bullish or bearish? I'm bullish on stocks. Then you go and you read articles and you look at social media,
Yes.
and
Yes.
all you do is reinforce what you are already going to do. And I think social media has a lot of positives, but one of the big negatives is the echo chamber effect, right?
Yes.
Particularly
Yep.
for investors. So my Twitter feed, after using it for 4 or 5 years now, is filled with growth oriented, technically oriented stock and ETF investors like that. Those are the things I've liked for years.
Hmm.
So if I'm looking for a diversity of opinion, if I'm looking to shake myself away from my biases, I'm not going to find it on my Twitter feed. I'm going to find a bunch of reinforcement for what I was probably already going to do. So
Hmm.
the way you correct for that is to flip it, right? Gather evidence first, and then look at, and then decide what the weight of the evidence is doing, then look at your positioning. Too many times we start with our positions, we start with our thesis, and then we see if anything has changed. And I think that sets you up for failure there. You want to start with the weight of the evidence. So the first chart I look at every morning is a 5-year weekly chart of the S&P 500. Same chart every day. And I do that without looking at what's happening today, whatever is happening with a particular stock or theme. It's like, what is the long-term trend in stocks? Start there, then go through all the other evidence. Look at different other indexes like the NASDAQ and the Russell. Look at sectors, look at global markets, look at currencies, look at commodities. Then at the very end of that, then I'll look at my portfolio and say, am I positioned for that evidence that I just showed is so clear? And so I think, again, having good routines and having a good process to systematically go through that evidence, I think, is the way that you minimize the negative impact of both those, among many behavioral biases that unfortunately we're hardwired to be victim to.
Yeah, it's the human element, right?
It very much. I mean, it's what makes us human. There are a lot of good things about that, but unfortunately for our portfolio, not great for that.
Yeah. So when you were talking about the confirmation bias, immediately one stock came to mind, especially in 2022, Tesla. Right, where here's a stock that you have that echo chamber left and right on Twitter. You're seeing all these people who did really well in a Tesla in 2020, and now they're coming out with all the evidence of why it should be a triple from here, or it should be a multi-trillion-dollar company, which in the end it might, and if it's their strategy and they're much more longer term holders, that's fine. But I've always found that that endowment bias has saved me over and over again, especially with the Tesla. Tesla was my biggest position in 2020, but in 2021, once it stopped working, starting going through that checklist that you were talking about, breaking the 10-week line, I'm down more than 8% on those current positions I have, et cetera, it just forced me out just by doing that instead of relying on all that evidence.
I think that's 100% right. I think it was probably in How to Make Money in Stocks. There's one of the O'Neill books, all of which I think are fantastic, but talking about that sort of that 8% exit, right? And again, I mean, it's a simple sort of shotgun approach. It's a sledgehammer of a risk management approach, but versus nothing, it is absolutely vital, right? I was told all large losses begin as small losses.
Yes.
So you can have some way to admit that you're wrong, which, Justin, as you alluded to, we tend to not want to do. We are so good at justifying why we're right, even when the evidence is so clearly against that. Yeah. So having even a simple approach to taking risk off when a certain level is triggered, I always describe that as a line in the sand. And what I tell people is, on your charts, treat your charts not as a painting, treat it as a conversation, as a workbook, right? This is your conversation you're having with the stock, and have a big line that is a bright red and a bold face color. And if the price goes below this, I don't care how much I can justify it, I'm out, or at least I'm taking a good amount of it off the table. And to your point, Arush, that saved me from probably what would have been some of my worst losses, was just cutting even things that I liked, where I thought the story was very good, but the timing was just not right. And it keeps you from, holding on to things way too long. And again, we're hardwired to do that, unfortunately.
Yeah. And I mean, that endowment bias, look, I always think of my dad with this. He had this really ugly orange lazy boy chair that my mom eventually made him get rid of. And he thought he would sell it at a garage sale, and that just wasn't happening, because he thought this had more value than anyone else in the world. It was conformed to his body and all of that. And Tesla, I think, is just the perfect example. I think there's so many people that were looking at that stock and thinking it had, just ignoring it going down and ignoring what it was doing to their portfolio because of how much value. And gosh, sometimes it was even worse if they owned a Tesla, because they were like, but I love my Tesla, I drive my Tesla, and this is the best thing ever. So I always think of the orange lazy boy, and gosh, it was scratchy and ugly and everything like that, but my dad loved it. So
well, David, when you talk about the endowment bias, one of the kind of the other stocks that came in mind, and I clearly remember it, and this is back in 2001, I bought Skechers at that point, and there was a Skechers store, and I was in Boston at that time too, and it was on Newberry Street. They opened up a new Skechers store. I would go there every day. Oh, there are people in the store. Skechers should do well. And I was up 25% on the stock, and this is where I started breaking all those rules that Bill talks about in the How to Make Money in Stocks book. I didn't take my profits at that point. Then I round tripped it. Didn't save myself at that point. Down 8%, didn't cut it. Down 20%, didn't cut it. Down 70%. Then I started to realize, oh, that's why they have that 8% rule.
Yeah.
But it was funny because those first few losses that I would take, I would dwell on them. It was like your ego's like hurt. You take it personally. I can't believe I did that. I'm so stupid.
Yeah.
But after
maybe this game isn't for me. I need to quit.
Exactly.
Right.
But
Absolutely.
after you get past that, you just learn that you're going to make a lot more mistakes than not in this game.
So I've spent time in my career working with different types of players, and I spent earlier in my career was a lot with institutional money managers and trading desks and hedge fund managers. And I would tell you what I've seen differentiates that cohort from individual investors, self-directed investors, is a general awareness of risk, right? Because I think money managers tend to have a much better sense of where their risk exposure is and making sure that their bets are very intentional, where I find a lot of individual investors end up having unintended bets. Okay, it turns out you're all in on these two stocks. Did you realize that, right? It's like owning the XLY and not recognizing you are owning Apple and Tesla basically with that position right now.
True, yeah.
So I think that's part of it. And the other one is recognizing and cutting your losses and recognizing when you're wrong, you just move on. And you are going to have even stretches, months, if not years, where you're struggling. But the point is, over time, you keep repeating those lessons, and those lessons won't be 100% right all of the time. There's no holy grail. But by following those routines, the 8% rule, thinking about position sizing and all that, those are the steps that allow you to invest, live to invest another day, right? And preserve capital when you need to do that. And I think admitting when you're wrong is one of the toughest things for individuals to do in life, but particularly with our portfolio. And it's probably the healthiest thing you could do.
Yeah.
Absolutely.
And I would say the one last thing was that a lot of times having a group, having someone that you can explain when I've had to explain a position or justify a position to someone else, that's when immediately, as you're saying it, you're like, I should not, like, why?
This is not going to end well.
Yeah, so I think that is another thing, is find your tribe, find a people. So for me, the CMT Association has been a great way to sort of find that group that I can have those painful but eye-opening discussions with.
Mm-hmm. Well, and when Arusha was telling his Skechers story, I mean, it kind of gets back to that whole confirmation bias. When you start looking at the stores and you're like, hey, look at how many people are here, and again, you're looking at one store and you're not maybe looking at the entirety of the data. So maybe we can kind of just again get back to that a little bit. You mentioned social media, which again is very the algorithms are working against you there, to just feed you what you want to hear. But what other areas of confirmation bias do you just have to be careful of? Because I know Charles Harris, one of the portfolio managers at O'Neill Global Advisors, he would kind of share when he started listening a little bit too much to the earnings calls, and just looking for every little rosy piece of information. What other kind of things can maybe give you a warning sign that confirmation bias is about to slap you on the head?
Yeah, so for me, I talk a lot about routines, and I talk a lot about checklists, and just what do you use to make a decision. And those things you all described, I would guess you don't have on a checklist of my ideal decision on a position. I can't imagine it involves, and now search for things that back up my bullish story. Like, that's definitely not on there, right? That's something we add on our own. So for me, I literally, with newer investors, with financial advisors that are trying to formalize their investment process, I literally have them write it down. Here are the 7 questions you need to answer. And they might be different for you. Like, it might be more earnings or more quantitative or more technical, but it needs to be your own process, and go through those steps. And with any new position, answer those questions and literally write it down. And at the end of the list, can you write buy or bullish? Can you justify it based on only what's on that page? And also do that with your existing positions, right? Because with a chart like Alphabet or like Tesla or innumerable stocks that we've seen over the last 12 months, looking back, it's so obvious that they rotated, but at the time, it's not as easy as it seems now, right? That's hindsight bias, which is another one, which is our performance gets better and better as time goes on, right? We have this ideal me that performed beautifully and picked the bottom and the top. But going through your existing position and literally listing out would I put new money in it today? I always call it the new money question. If you had new money to work today, would you put it in this stock? And if the answer is no, then why do you have your old money there? Are there better opportunities you can find? And a lot of times we keep it in a position just because it's there and not because the evidence justifies it. And so I think literally writing it down or having a checklist that you follow is vital, particularly as you're just getting started.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.